Hello, I am Gillian Seguin, Associate Wealth Advisor at IA Private Wealth with Reyes Group. We made it, we did it, the end of the year came and went, so Happy New Year to all of my viewers. I am here today with my quarterly commentary for Q4 2024 and just a little bit of a snapshot of what we're thinking going into this new year. So obviously we all felt it when we got our December statements that 2024 was yet another outstanding year. In fact, it was a second consecutive year for historical average highs. If I go over the individual markets, the Dow was up 13% over the year, NASDAQ 29%, S&P 500 23%, and here in Canada we were up about 18.5%, which is the best year we've seen since 2021. Despite the ongoing geopolitical risks, the wars overseas, and election uncertainties, the economy still performed better than originally forecasted. A lot of the recession fears that we had going into 2024 were alleviated, and these were really bolstered by a cooling of inflation and a strong corporate earnings across the board. We also saw 2 more rate cuts. Canada here in October, we had 50 basis point cuts in October and December. And in the US, they also had 2 rate cuts, a little bit less aggressive at 25 basis points in November and December. I think going forward, we will still see some more rate cuts, but they'll be much more measured in pace. So the anticipation is that in Canada, we'll see a 25 basis point cut in March likely, and in the US, probably another 25 basis point cuts not till June. If we look at what sectors performed best last year, in the US, IT, communication services, consumer discretionary, and financials. Interesting note is the sort of IT space used to be termed FANG, and now the new term is Batman, which includes Broadcom, Apple, Tesla, Microsoft, Meta, formerly Facebook, Alphabet, and NVIDIA. In the US, the underperformers last year were more so healthcare, materials, and energy. In Canada, we saw strong sectors in IT, financials, materials, and energy. And conversely, on the lagging effect was communication services, real estate, and utilities. With Trump winning and basically a red sweep at the end of the year, certainly that bolstered the markets into the close. So looking forward to 2025, I think optimism remains. In Canada, we're still expecting some volatility, but with the government investment continually into infrastructure, that should support that sort of materials and energy sectors again. Trump's tariffs will pose a headwind, but there's a lot of ongoing dialogue regarding those tariffs. And the Washington Post recently reported that Trump's team was considering narrowing the scope to focusing really on critical imports only. So we'll have to see how that plays out. But the common thread going into 2025 amongst most analysts is the need for diversification, globally, sector-wise, and asset class. Interestingly enough, though, we have seen a really narrowing or positive correlation between asset classes, so it's going to be difficult to find the diversification in that field, but no one really cares when all of them are continuing to go up. So here's to 2025. Look forward to seeing you next quarter. Thanks for tuning in.